So did you trade it perfect?
No, I certainly did. And this is actually something that's we can kind of touch on in terms of like, is on-chain voodoo. People forget that it started in like the first metrics came out in 2018.
Welcome back to the Bitcoin Edge, where we examine the exciting world of Bitcoin and cryptocurrency. We explore how Bitcoin is changing finance, is based on truth and not trust, and how it is a hedge against inflation and the current financial system. Today we will hear from Checkmate, a renowned on-chain analyst at Glassnode, who recently interviewed twice by What Bitcoin Did. The links are below. What Bitcoin Did asked Checkmate about how Bitcoin changed him, and his answers were fascinating. Checkmate also delves into the Bitcoin's market cycle and where he thinks we are now. Understanding market cycles is crucial for any investor or trader, as it can provide valuable insights into behavior and trends of Bitcoin. These cycles also help investors make better decisions about when to buy and sell. Checkmate's expertise and personal experience with buying high and selling low will equip you with more knowledge on how to navigate these cycles successfully. Let's listen to Checkmate as he explains what Bitcoin means to him, the stages of the Bitcoin market cycle, and where we are now, and much more.
What is it about Bitcoin that changes you?
I mean, for me, like my background is civil engineering, right? And before that, even though my lecturer told me that in the start of the class, first lecture I ever had, 30% of you are going to end up as in finance. And my internal brain goes, I'm not going into fucking finance. And now I'm in finance. And essentially, why does that happen? Because you look at the world, as an engineer, you look at the world from a problem-solving perspective. And what you're told is not how it actually works, right? And Bitcoin defies logic to the traditional economists. They simply can't get their head around it because it's almost too elegant and too simple for people to understand. It's too simple. And yet it works. And we were talking about this today. I think at the end of the day, what does Bitcoin makes one assumption and one assumption only, that human beings are greedy and we're going to operate in our own best interest. And the great irony of making that, I mean, greed is good, right? That went through a whole phase where people go, is greed really good? Look at all the havoc that wreaks on the world. But it's like, yeah, but that's the constant. Doesn't matter what you do, you're never going to stop human beings from being greedy. So because Bitcoin bases its sole assumption on people being greedy, and that's what makes it works, in a very ironic way, it delivers the exact opposite result, is that people start thinking about other people. People start thinking about their impact on society. They think long-term, right? When you think long-term, generally speaking, you're thinking about, yourself, but there's other people involved. The longer that time goes on, the more other people are involved in your life, the more people you intersect with. And I think that Bitcoin forces you to have that lower time preference. The scarcity is a part of it, but I think the scarcity is just the first thing that gets you interested. It's the thing that people gravitate to initially. But then you think about energy. I didn't expect to be thinking about energy grids. I didn't expect to learn about nuclear power. These things come because it forces you to rethink your current model. And I think it comes back to it's based on greed. And for whatever reason, that base assumption makes it work in a very elegant way and forces you to rethink everything around you. If money is time, and time is our scarcest resource, in Australia, you may pay, between 30 and 50% of your income is just straight tax. Add on GST and a couple of other, all the fines and all the other taxes and things, you're probably talking about somewhere between 50 and 60%. So that means that you've got to work to July. July is the government's, and then everything from July to the end of the year is yours. That's a pretty shitty go. But then on top of that, they're also going to take as much as they want via the inflation tax, and why they do it. And it's not like this is just by happenstance. They write about this, and by they I mean central bankers and the like. They tell you that the inflation tax is hard for us to reason about. So whatever's left in that time, we're going to take a chunk more of it. Oh, and by the way, you earned some interest in your bank account for offsetting that inflation. Yeah, we're going to tax that as income too. So you look at this whole thing, it's like, it's just really unfair. And because of that, and it doesn't dilute everyone equally. How do you have politicians who are on a $200,000 salary, work that for 10 years, 200 million, right? The math doesn't make sense. Where does that money come from? It's slow and insidious, but we're hitting a point in society where more people go, all right, I've kind of had enough now. Like this is now, it's actually bullshit. 50% of what I buy Bitcoin for is because of the scarcity and the savings and all that. But the other half is just a real big fuck you. Bear markets give you life skills that you simply can't get. I've never seen anything quite like it, but you just can't develop these skills elsewhere because it is a hardship. I mean, 85% down, 70% down is brutal. And markets are they're non-linear, right? You can't actually wrap your head around why things happen. The media is always trying to give you reasons why, but there's forces that happen underneath the surface that when you look at the data, it helps you understand why these things are happening. At the end of the day, it's all about supply and demand, right? When price goes down, there's literally more supply than demand for whatever reason. In the short term, markets are a voting machine, which means they go wherever the narrative wants them to go. But over the long term, the fundamentals kick in and markets become a weighing machine. And that's where you actually start to see the long-term behavior of these assets. So that bottom we hit in June all the way through to FTX, we saw two things which are really important. We look at profit and loss. We look at every coin. Where did you acquire it on chain, right? Where was your DCA level and where are we currently? That's your unrealized profit or loss. So most people can't carry a large unrealized loss. The hodlers can, and they get to a certain threshold, and we hit that almost exact level to the dot. The amount of pain that the hodlers can handle because we're price insensitive. There's a whole other side, which is how many people actually flushed out. And what we saw is a statistically significant, an absolutely enormous amount of coins got flushed out at a huge loss. And when we look at who they were people who bought the top. They weathered the entire bear market all the way to the bottom, and they sold the bottom tick. This is what happens every single cycle. We can see it play out cycle after cycle in all data. And I guarantee you, if we had 10-minute block confirmations for gold or for Apple stock or for any asset, I guarantee you would see the exact same thing. The difference is that Bitcoin is large enough, important enough, and significant enough, and we have the data that we can visualize these things. Human beings are exactly the same. Our brain has not changed. It's 1,000-year-old hardware operating in 2023. So the interest rates change, Jay Powell's mood change, all this stuff changes, but our ape brain and our response to fear and greed never changes. And that is why you can look at price charts from the 1920s and see the exact same patterns as today.
Where do you think we're now?
I think we're somewhere around the depression phase.
Yeah, I think so.
To be honest, it's got a lot of the same feelings as 2019. And the way I've been describing it, it's sideways, boring nothingness that just never ends. Right?
Yeah.
And when you look at who's left in the market, it's just the hodlers. There's no reinforcements coming. It's basically just us, which means it's a slow, painful grind. But you also don't have the magnitude of the drawdown, right? Where you've got all that liquidation and major sell side and forced sellers. A lot of that's happened.
I love it. So euphoria. I'm genius. We're going to get rich. So did you trade it perfect?
No, I certainly didn't. And this is actually something that's we can kind of touch on in terms of like, is on-chain voodoo. People forget that it started the first metrics came out in 2018. Well, I joined Glassnode pretty much at the end of Thrill in February 2021, right? So I had 3 months.
You moonwalked into the office.
Literally walked in. Suddenly I've got all these metrics and tools. And I was like, okay, I've got to actually explore what these things do. So my learning exercise of working out, actually finding out what tools, what do they all do? What do they mean? Some of them are good. Some of them are fantastic. Some of them you can probably ignore. And that whole process, euphoria, complacency, panic, that's been me and my team actually learning what the tools are. And our newsletter is basically us learning on the job.
And there you have it, an insightful journey through Bitcoin market cycles with Checkmate from Glassnode. Understanding these cycles empowers you to make more informed decisions and capitalize on the opportunities within the Bitcoin market. This is not financial advice. Let us know what you think below, and don't forget to like this video, subscribe to our channel for more exciting content, and hit the notification bell to stay updated. Thank you for watching.